relevant? Does that mean that 4-year cycles are over? And how does that play into the actual stock to flow of Bitcoin, which doubles every 4 years, regardless? Anyway, so every 4 years it does become twice as scarce until it's infinitely scarce.
It's a really good question. Really good question. So first thing is on the short term. So we have seen blocks. The average block reward in fees has surpassed block rewards. This has happened 5 times in history. All 5 of those times, it was only 5 times in history. Right? So fees will come back down. But at some point in time, you're right, the fees will have to, by definition, surpass the block reward because there is no block reward. So that's going to happen eventually. In the short term, if you're a miner, you just built out a whole bunch of mining infrastructure, you've plugged in, you've done your economic calculations, you for sure as shit have not factored in fees being twice as much. So the way to think about the current fee spike, that's just straight up Bitcoin in the bank. And given the price that we've seen recently, they will hold that, and hopefully they learn and will sell near the top rather than near the bottom. So my expectation is that most of the fees we just saw mined will be hodled, actually, because why wouldn't you, as a miner? Now, the only caveat to that is that they got fleeced in 2022, and their shareholders cannot be happy, so they may sell for cash. It doesn't impact the stock to flow so much. Interesting you point that out. There's a paper that Dave Kuehl and I are in the process of finishing up where we think we have a mathematical framework to account for lost coins, which I believe will actually solves the stock to flow problem. The stock to flow model, by the way, is the most bullshit, horseshit, wrong. Do not ever listen to that absolute clown. Stock to flow as a metric is very interesting. And I think we may have found the reasons why stock to flow performs the way it does. Just don't project the price off the thing. Anyway, so it's a very interesting topic. I think that fees don't affect the stock to flow and the scarcity element. They will over the long arc of time. If fees remain high, miners will start to budget for that. So once we hit that kind of fee plateau, miners, think about it like a business. What can you depend on? Right now they can depend on the block subsidy. They will build their infrastructure for the block subsidy. Over time, they will build it for the block subsidy and the fees, and then over time they will have to adjust for the fees because that's all there is. So there is or Michael Dunlap's coins and lots in the future and come out in 2100. So anyway, so that's kind of the process, right? They have no choice but to factor in just the subsidy. If this becomes a new plateau, they'll start to build that infrastructure, and if we actually get a higher fee plateau, gut feel, miners will build too many mining rigs, they'll hold coins too long, they'll sell at the bottom of the next cycle, and we will rinse repeat the exact same shit.
Thanks, James. Would it be fair to say that the analysis that you're doing would be considered a sort of short to medium term type analysis? You're not necessarily, you're kind of looking at where Bitcoin's price is going to be within the next sort of 1 or 2 years typically, in that sort of range. Would I be right there?
Yeah, the way more to think about it is not so much, and you'll actually see I don't do price predictions, because if you do price predictions, you're guaranteed to be wrong.
More like sentiment analysis.
No, totally.
Yeah.
What we do with on-chain, this is what a lot of people get confused. They look for the price. Where is the price going to go? The answer is no one fucking knows. No one knows where the price is going to go. What we are looking for is the weather. If it's pissing down rain, you should probably take a rain jacket. If it's not, then you start, you think about in terms of risk. Do I have the risk factors? Do I have the supporting tailwinds? Do I have the things that I want to be seeing in a bull market? So it's actually less about price prediction, so to speak. It's about, is the current trend, which at the moment's an uptrend, is it sustainable? Do we have adoption growing alongside it? Great example, if you look at the second peak in 2021, the one in October and November, if you look at that from an on-chain perspective, it has none of the symbols of a bear. Of a bull. It's bearish as it gets. There's no activity, transactions are down, active addresses are down, supply is bearish. There's lots of things that are very negative in that, but we're at all-time high. So you kind of look at that thing and you go, well, it's an all-time high in a bear market. The bear market really started in May 2021 by pretty much every metric. It's kind of an interesting concept, but essentially, if you then overlay FTX and Alameda's volume, it's clear as day as a stamp up. So it comes down to understanding the climate and the weather that Bitcoin is operating in, and what is the sentiment that people are supporting.
Awesome. I think what it was more about was an attempted sort of rather clumsy segue to bringing Peter into the conversation about his much more long-term outlook for Bitcoin. You mentioned it here at a meetup before. I just wanted, perhaps you could mention that again and cover what your long-term analysis of where Bitcoin could ultimately go, given what can come into it from the rest of the world.
Sure.
Yeah.
I probably will want to talk about the framework for the valuation rather than the number.
Yeah, that's what I meant.
And
yeah.
so the number, when you put numbers into the framework, it ends up being a stupid number that you just literally breaks my brain just thinking about it. So I don't like to talk about it because, like you said, I'm only going to be wrong talking about a number. But you know, when I think about what the framework for this is, the setup is, firstly, there's the assumption made that we're only going to have 21 million coins and that blocks are going to be produced every 10 minutes to start with. So I think all of us in the room would agree that that's a fair assumption to make for the Bitcoin blockchain. Then if you look at the tech innovations that haven't really been valued, there's no way of really framing a valuation framework for the tech innovations that are, I think, unique to Bitcoin. We've got basically 4 of them. The first is, and the most important, is absolute digital scarcity. 21 million is only ever going to be that. That is a big freaking deal. That, you know, we talk about it, we think we know what that means, but we've got no idea what that means because we've never seen it before and we've never seen that play out in perpetuity. And so that's the first one. The second one is in light of, on the backdrop of, you know, some geopolitical events that have happened in the last, say, 24 months. The first being the Canadian truckers having their accounts seized or frozen. We have now, for the first time in history, censorship-resistant money. And you saw that, you know, I don't want to get political, which, you know, people think I'm getting political when I'm talking about it. I'm just saying, you know, we have a very privileged opportunity to live in a country that has the disposition of a legal system that allows us the presumption of innocence until proven guilty. And my particular dismay with what happened to Canadian truckers, and it literally makes the hairs on my back of my neck stand up, thinking that a government has such overreach to presume that they're guilty before they've been charged or formally prosecuted with it. So that, you know, that proved out and was a great selling point for Bitcoin censorship-resistant money. And then, you know, fast forward maybe 24 months when Russia's gone into the Ukraine, and I didn't think I'd be defending Russia, but, you know, when it comes back to property rights, I don't think any country has the right to effectively put their finger on the scale and stop a country from accessing its own assets. So, you know, we've had 2 geopolitical events in the last 24 months that have been absolute screaming marketing campaigns as to why you want to hold some Bitcoin. You know, if they can do it to, you know, effectively innocent citizens of, you know, one of our greatest democracies or Western democracies, if they can seize an entire nation's foreign reserves, just think about this for a minute. What can they do to you? And this is where I sit there and I think, well, you know, when you start incorporating in a valuation framework around, well, what are those 3 innovations going to do? Well, firstly, digital scarcity is a big deal. What happens when we start applying that to things like collateral for loans and the rest of it? All of a sudden, this gets exponential very quickly. And then you couple that on top of seizure resistant. Well, I can tell you right now, you know, if Russia had their time over again and they understood Bitcoin like we did, there'd be circa 2.5 million coins sitting on exchanges that would be purchased overnight with the 500 billion in foreign reserves. So, you know, divide 500 billion by 2.5 million, or there might only be 500 million coins for sale, or 500,000 coins for sale. So, you know the numbers that are available or traded on a daily basis. And then the final one, which is really boring, and I don't like to talk about it, but this is where all the juice is from an exponential term and from a valuation framework, is for the first time in history we have an immutable ledger. And this, you know, is an accounting term that I look at and I think we have never seen what this represents or how this is going to fundamentally change human society. And I sort of had a conversation with Luke Broyles recently where we were going back and forward as to, you know, what does this mean for humanity on a broader sense? And, you know, he we talked about this, and to put a thought to you to think about this. When you make a transaction on chain, that transaction is going to be on chain forever. You are going to have your great-grandchildren's children, basically, or great-great-great-great-great-grandchildren's children, looking at how you behaved on chain with your wallet. And they're going to look back and they're going to go, wow.
That's a Pornhub address.
Great. How do you respond to that? And I think on a more serious note, that's too good. You look back and your descendants are going to be watching how you behave with that wallet. Were you trading in and out of this wallet to go and shitcoin on other blockchains to try and gamble literally their futures away? Or were you a very good custodian of that wallet that basically sat there and had a huge amount of, or no activity on that because you understood the value of that? And this is where the Immutable Ledger represents a complete paradigm shift in humanity, in that we have effectively three eras of humanity. The first is the pre-written word. So when we were cavemen, knuckle draggers, mouth breathers, walking around basically hitting things on the head and knocking them down. Then we discovered the ability to write and language, and we could write things down, and that might be for 5,000 years or take your pick. And what Bitcoin represents with an immutable ledger is now a recorded history with no subjectivity to it. There's no spin on, hey, we won the war, so we're fucking great, you're shit, you lost. We're going to basically paint you to be an arsehole, and we're really saintly, so whatever. There's going to be an immutable ledger that shows you exactly how everyone behaved. And this is something that can't be undone. So I think it's a new paradigm shift for humanity. So that's a boring accounting talk, but from a market cap perspective, I look at this and I think, how do those four things, or four key tech innovations, really change the functions of money? And we are all familiar with the functions of money being store of value, medium of exchange, unit of account. Well, store of value, I think, gets a step function upgrade, because no longer are you looking at effectively gold is the apex asset in that class. It's a 10 or $14 trillion industry, or market cap, I should say. So there's $14 trillion of market cap, and what does Bitcoin do better than gold with those tech innovations? It introduces absolute digital scarcity for the first time in history. We can't really measure that. And it also measures seizure resistance. And when you think about seizure resistance, for the first time in history, someone who stores their Bitcoin in their head can be knocked on the head, and the perpetrator of that cannot take the asset. And an example I like to highlight here is that, thank God, the pharaohs of ancient Egypt never had Bitcoin, because apparently those pyramids were basically built to house all of their wealth into the afterlife, and if those pharaohs walked around with 12 words in their head, they'd just smack them in the head and throw the bones in the desert, and we'd never have that. So it's quite a novel innovation when you think about it from that perspective. So I think Bitcoin becomes the best store of value for those two reasons. And then you move to medium of exchange, and I won't spend too much time here. It's a subjective opinion, not objective, but I think Bitcoin's a better medium of exchange than the USD, which is the dominant global reserve currency, for the fact that we have censorship resistance, which the Canadian truckers can attest to, and we also have an immutable supply and issuance, so no one's getting diluted by 50% in a 2-year period. Those are two big innovations when people cotton onto it, are going to move Bitcoin above the USD as a dominant global reserve currency. And then the final one, that medium exchange market might be a $100 trillion market. I'm not sure what the number is, but this is where I leave it to you guys to input the number. And then the unit of account market is effectively replacing the double entry ledger system that we're working with now with effectively a triple entry ledger system, which offers some very unique, I guess, insights. And this is literally what your work entails. Like, you must look at this and think this is quite remarkable, because whether you're looking at stuff now or in 100 years, the information that you're looking at now is going to be exactly the same. And I look at this and I think the unit of account market, I believe, is a sort of $2,000 trillion market that needs to be accounted for. And when you look at the derivatives and basically...
That's 2 quadrillion then, is it?
That's it,
yeah.
2 quadrillion. So all of a sudden we now have a new form of unit of account that basically supersedes what our existing unit of account measure is now in the double entry ledger system. So where I think there is a big misunderstanding from just an economic framework or a monetary framework perspective is that most of us look at this and think, okay, well, we've got the best store of value, best mean exchange, best unit of account, add all those numbers together and that gets what the potential market cap is for Bitcoin. And you think, wow, okay, it could be $2.1 quadrillion, give or take, divide that by 21 million, and I understand price is determined at margin, but just for simplicity's sake, you get to $100 million a coin. Well, that seems pretty right, but I think the logical fallacy with that is that we've never seen a store of value have to compete with a medium exchange having to compete with a unit of account in order for basically buying space on the blockchain. And I might just take a quick side note to say what the ordinals shit show has showed me over the last, say, 2 or 3 weeks has been that, you know, the fees have gone through the roof, and to your point, Dylan, what this tells me is that, you know, we have the meth heads telling us that, oh, the fees on Ethereum are so high, they're amazing, they're this, Bitcoin's dead for that reason. It's like, listen here, fuckhead, you don't even know what's going to happen, because what's going to happen is Ethereum, because it's such a shit show with proof of stake and it's such a circular reference, you know, for effectively securing anything, they're going to have to actually buy space on the Bitcoin blockchain to secure their network. So what do you reckon Bitcoin's, or what do you think they're going to be willing to pay to secure their network on the Bitcoin network? And this is the point I look at and I'm like, these guys haven't even thought that through. I'm like, good luck to you fellas, you just...
It seems with everything though, isn't it? It's like everything's like an ad hoc decision-making process. Whatever I've observed of that part of that ecosystem, it seems like it's almost they make it up as they go along, don't they? That's
whatever's popular at the time, it feels like.
What's staggering about Bitcoin is the fact that every time someone has tried to second-guess Satoshi Nakamoto's original design decisions, they've ended up only discovering after their proposed changes failed why Satoshi picked those numbers to begin with. It's a level of prescience I don't think, you know, it's quite staggering.
Second system syndrome.
Sorry?
Second system syndrome.
Right, yeah.
Where you take a very simple concept and you just simply can't believe that it could work.
Yep.
So you go and take and you go, oh, we did add this, and then you realise,
oh, that's why it was done like that way to begin with.
Pretty well designed. It really shouldn't have changed any of those things.
Yeah, without having to do it for real. All these guys do it for real, and only then discover why it wasn't done that way in Bitcoin to begin with.
I think if there's a reference on that, first one, definitely have a look at second system syndrome on Wikipedia, because it is Ethereum. The second thing you can do is Nick Carter wrote a really good piece called Bitcoin Bites the Bullet, where he talks through all of the trade-offs that initially when you look at it, you go, I mean, that was a stupid thing. You're not going to scale. You're not going to, you know, block size will be constrained. You see all these things, but then you look at the game theory of why that plays out time and time again, and it's crystal clear. And just to touch on something you said there, the one thing with the ordinals, whilst I don't believe in the whole ordinal theory, what I do like is that people are putting graffiti on Bitcoin. I actually don't mind the inscriptions because in a way, it's a record of history. And you're right, you can never remove that, right? So one of the coolest inscriptions, I think it's very, very early in the piece, was the Tiananmen Square photo. You can't remove that. Now roll that clock forward in this strange world that we all live in where there's kind of, what is truth, I don't know. If it's on Bitcoin, it was there at that point in time. You can prove that it was there at that point in time. It is the ultimate time-stamping mechanism. So not only do you have the psychology of us as a society behaving with this macro index, buying and selling, but you've got people recording their dog, but also historical events that can no longer, you cannot stop it, you can't kill it. You cannot erase that photo. It's there. Good luck. And if you're a government who doesn't like it, it's stiff shit.
Well, I think just on that, that's an interesting point. A little bit off topic, but happy to cover it. Is that it does appear though with that is that it's not a lot of those inscriptions don't seem to be being done purely for that reason. There is some evidence to indicate that it's an attempted attack, given the extremely inefficient way in which the people are putting that data on the Bitcoin blockchain. It could be being done using a fraction of the data that it's being taken up to do it. And furthermore is that I don't think it would ever have been necessary to actually put the photo in all of its bytes into the Bitcoin blockchain. You only needed to encode a hash of it, and then it could be proven then that the data didn't exist.
But you'll never have that. That assumes the perfectness of humanity, which we know is not real. The reality is people make stupid fucking decisions. And at some point, the Bitcoin chain will price those people out, right? So people will put this stuff on the chain, they'll play around with it, they'll find what the actual use cases that make sense are. Eventually, they'll get priced out. I mean, this fee spike will die down because people will just lose interest.
Look, it is a self-limiting problem. It's costing whoever's doing it millions and millions of dollars that they're not getting back in value and whatever they're doing. There has to be an alternative. There's a few other things going on in other chains that are looking a little too coincidental, as though they might be using it, such as BSV, their spike. You've got a few wealthy individuals there that are known to manipulate the price of that upwards in order to lure new traders in to follow that pump, and also do something on Bitcoin. Like, this is not new, by the way. This fee spike that we're seeing now, just again to cover this a little bit off topic, but a lot of us who were around in 2017, I think you mentioned, James, you were coming
2018.
2018. So in 2017, and it might have still persisted in 2018, we went through the same thing. And who was doing it then? It was Roger Ver and the Bcash crowd. And what they were doing is they were spamming the Bitcoin network with the idea that they could then point at Bitcoin and say, hey, look, it doesn't work, it's all clogged up, you need to raise the block sizes. But here's my alternative version that's already done all of that, so you should buy that instead.
The last I heard is getting margin called on coin floor.
Exactly, yeah. It didn't work then, and it won't work any better now, because each one of these attempted pumps of these scam forks has always proven to be weaker than the previous one. You've probably seen that flesh out in the numbers as well, James. So each subsequent attempted pump of these alternative forks has ended up making a lower high than the previous one.
I mentioned before that realised dominance. I think, irrespective of what you think about this market and all the other coins, everything else is just like 0 of 0. It's just straight down. The only other asset that's even grown a remote share is Ethereum, and even it's losing share to Bitcoin. So
it had its peak in 2017.
It's one of these
things
where it's like
for flippings when each subsequent attempt.
The narratives that you see play out in the data. When you just value things based on, prove to me that you actually have those coins, move them on chain, realize the value, and until you do that, they're not real. So I'm sorry, Ripple, you can't consider your coins to be real until you sell them and someone buys them and gives you that money to prove they're worth something. Because until that point, they're just not.
I think what I'm looking forward to seeing over the coming years is a new dollar milkshake theory where Bitcoin takes the fees of Ethereum, and they're going to pay a fortune to secure their network with Bitcoin. Everything revolves around Bitcoin moving forward, and this is where I don't think we comprehend how important our little pet rock is, that all of a sudden, people are very quick to, mock this thing that doesn't change, that is effectively indestructible, but that is its superpower. And this is where, if you want to send a message through the future, completely unhindered with zero attenuation, I think of, say, religious examples, and I think, what's it worth to the Catholic Church to send a copy of the Bible, or put the copy of the Bible on the blockchain and send that through the future completely unaltered for the rest of history? I'm pretty sure they're going to, and for them it's worth more than $20 to put that on the blockchain.
Unless they wanted the option of being able to alter it.
And therein lies the question. And this brings us back to an immutable ledger. Basically it brings up some serious concerns for us, because, and this is where I think if I take the conversation to, say, a little off-chain, but to your point earlier, James, about the fact that what this is a study of human behaviour. If we know our behaviour is being assessed by our descendants in the future, all of a sudden there is a consciousness to our decision-making process today, which means, I know from a personal level, we need to be making, decisions, being mindful of the fact that we're going to have generations into the future scrutinising all of the decisions that we're making on-chain today.
Why didn't he hold the coins? They were worth so much. That really is it. I mean, fiat money so far has never put that kind of, has never given this the ability to pass on that. Well, not for ordinary people anyway. If you had this extreme amount of fiat wealth, I suppose you were able to there were financial dynasties, I suppose, that came out of that. But nothing in so much as that the decisions of what a person in this generation, you yourself can make, could potentially impact the wealth of your future descendants in terms of what they could, given the fact that we are now on a system, it's an Austrian system, that as the size of its economy grows, so too does the value of every fixed number of subunits of that economy. The 2.1 quadrillion subunits, that's it, it's fixed. A lot of them are, as Peter already mentioned and James already mentioned, are lost. So whatever's left, it's like the world divided by, as Knut Svanholm, who was at Bitcoin Alive, said, it's the world divided by 21 million. So as the Bitcoin economy grows, well, so does each share of it, denoted at the moment by a Satoshi.
It's funny to think about that, and literally I spend my day-to-day basically assessing risk, looking at investments, and trying to mitigate and avoid problems moving forward. And to that point that you raised, I look at and think, if the world understood what this technology was, I don't think we'd have global reserve currencies. No one would accept anything other than Bitcoin. And this is where, from a personal point of view, I have fun thinking about the fact that what happens in a world when we're hyper-Bitcoinized, when the only available, money is going to be Bitcoin. And I think if we have a functioning credit market with a stable coin to top that, we're going to be in a position where we're going to have the world global daily trade volume, whatever that might be in US dollar equivalent, divided by the number of Bitcoin minted on the day. And this is where, to the point, well, the question you raised earlier, did you have a $7 billion valuation on that? That's what that would look like today. We've got roughly, and this is where, share the framework so you can input your own numbers, but if that were the case, we've got $6.3 trillion in global trade, and we've got 900 Bitcoins minted on the day. So divide 6.3 by 900 Bitcoin, and you come up with a number close to $7 billion. And ironically, that's the conservative number relative to the other framework for valuing Bitcoin. So things break.
Yeah, I did have a question on that, because I think it was that figure, and again, you can put your own numbers in, don't obviously pin Peter to that particular number, no doubt, but
oh yeah, go do it.
Well, no, sorry. Take it as a rough idea. That's somewhat, I understand that rough order of magnitude idea is predicated on the idea that Bitcoin is traded on the margins, isn't it? So that you don't obviously need to buy every Bitcoin for that price in order to get that order, that kind of valuation. But I was going to say to that, doesn't that also cut in the other direction? The fiat world, of which the wealth is being drained out of and into Bitcoin, its values are also being traded on the margin. So as we drain more money out of fiat, doesn't it go to an accelerated downward spike, and therefore there actually isn't as much money in fiat as you think? Because as soon as a certain number of people start to sell it off, that value evaporates on the fiat. So does that make sense?
Yeah, we've got a deflationary credit effect.
Right. Is that what I'm saying? If that's the word for it,
yeah,
I'll take it.
I think what you're saying is we get a deflationary credit event because we're basically built on a house of cards, and there's so much debt in the system. I look at this and I think, well, up until Bitcoin, the only way to solve this credit problem was effectively to go to war. And now we have a very elegant solution that enables us to get out of, effectively a physical conflict without having to level the debt. And we've got, for the first time in history, a digital money that can consume 99.9% of the value on Earth and leave the value in the current assets at what they are. So, given that price is determined at margin, I understand what that looks like, but you might only have, and this is what I envisage, you might only have the Bitcoins that are minted on the day available to facilitate trade on a daily basis.
Because all of the others are held in cold storage?
Cold storage, you might have them time locked. You could have that as a quantum asset to secure collateral. You might have a functioning credit market that sits on top with, potentially a stable currency. There are so many possibilities I look at that, the imagination or the fancifulness of thinking that Bitcoin is going to facilitate every trade on Earth, I dare say, for me personally, arguably for you and speaking for you, JP, just putting words in your mouths, but if you had the opportunity to basically take Bitcoin for every, piece of income that you had, I dare say you'd do it. And I know plenty of others would. And that comes from basically years and years of studying this and looking at it and understanding what it is.
And in fact, you can have that. Even if you're just earning a traditional wage through the fiat system into your bank account, there's plenty of ways you can simply convert that money into Bitcoin once you've got it, or at least the leftover money after you've taken care of your day-to-day living expenses. So even if you're not being paid in Bitcoin directly as a wage, the conversion process is really quite easy. This actually, you mentioned, I've always thought ever since I first looked at Bitcoin this is going to be the next world reserve currency. You mentioned that there wouldn't be a reserve currency, whereas I think that if there were to be a reserve currency, Bitcoin would actually be that equivalent. And I had a little it's not a conspiracy theory, it's more of a sort of speculation as to, often people speculate as to who was Satoshi Nakamoto, who was behind it. And there's been very many speculations, and we've had cosplayers step up and pretend to be him, but the fact is that no one really knows. We've had a few. There's one guy still going around there. He can ask himself all over the world. If I had to speculate, I said it would not be entirely unreasonable to think that it could possibly be an actual group of people involved in sort of white hats in the US government who have already seen the inevitability of the US dollar eventually losing its world reserve currency status. Every world reserve currency eventually has done that. And so if you've recognised the inevitability of that, the next question you have to ask yourself is, what would be worse? Would it be worse if China got it, or Russia got it, or another country got it, or would it be worse if no one had it? And so if you've already recognised that it's inevitable, well, what better solution than to put out there in the world this thing that now means that in the future, no other current, with Bitcoin now in the world, there's no longer any reason for any other country to have that exorbitant privilege, as it's called, of owning the world reserve currency. So America, I think, will be the last country to have it, because now that Bitcoin exists, there's no reason for all of the other countries in the world to agree to hand it over to anybody else. I don't know what your guys' thoughts are on that.
Oh, good, interesting. So I agree, and we've seen a lot of talk about de-dollarization. Right? This is kind of the hype on macro Twitter and the like. De-dollarization has two parts: global reserve currency, global reserve asset. Global reserve currency is the medium of exchange, where you do your trade volume. You think the US dollar is 89% of all trade volume. I strongly expect that will stay the same, because you're right. What are you going to do? Use the ruble?
You'll never get anyone. The countries never agree.
So to that point, the US dollar has a trading pair in every fiat currency. So does gold. There's only one other asset in the world that has a trading pair in every other currency, from the Nigerian naira to the, it's Bitcoin. It's the only other asset that you can buy with fiat in every fiat.
And gold doesn't work in a digital world.
So the Australian dollar, good luck swapping that for naira. I mean, not that you'd want to, but if you did, Australian dollar doesn't have. The Canadian dollar only trades against the US dollar, right? Most currencies only trade against the US dollar. Bitcoin trades against every currency. So it already has, at a human level, a personal level, it already has an exchange rate that very few other assets do. Now, you're right about gold. So when I look at this from a geopolitical standpoint, right, I think the currency will continue to be the US dollar, because what the hell else are you going to use? Yeah. Now, there's a bit of that currency component, which is the medium exchange bit. What if you're a country, right? Saudi Arabia is a good example, because they're not currently on the wrong side of the US, but you could see how they could end up on the wrong side of the US, and they just watch what happened with Russian reserves. Are you going to keep 100% of your reserves in treasuries? The global reserve asset, not the global reserve currency, the global reserve asset, your savings, your cold storage? Probably not. So what are you going to start doing? Well, looking for alternatives. What is the ultimate final settlement? Gold in your vault. Now that's a real pain in the arse, because you've got to send warships, you've got to send planes. It's a real pain to move gold around. I literally emailed the Perth Mint to find out what it takes to get gold out. Fuck that. So if you're a country, final settlement is a gold bar in your vault. But at the same time, I don't really want to be shipping gold for my oil trades. I don't want to be shipping it for my wheat and my grain. So what about a liquid layer of gold sitting on top? What's the first central bank to step in and say, well, maybe we can have 0.1% of Bitcoin just to settle our day-to-day trade with, I don't know, oil producers who also happen to be mining Bitcoin now and are increasingly going to become familiar with the technology. So you start seeing this thing, it's like, I mean, they need final settlement, it can't be treasuries. The Global Reserve Asset has to move to either gold or something else that's a good savings technology. It's going to be gold, except for that little bit on top, which is then going to become maybe not so much of a little bit, and then eventually they go, this yellow metal's a complete waste of time, right? And it goes down the path of silver. So you can see how this thing plays out geopolitically. It starts small, but it grows to become not small.
I can't agree with that more, and I think there are going to be a number of tipping points that lead to that scenario that you lay out. And I think the tip of the spear for me is Russia becoming the second largest, or having the second largest hash rate on Earth. That is a big, big deal. I think, you know, they will get familiar with the technology, exactly as you said. They'll understand that they can sell it, monetize all of that wasted energy in this, you know, Siberian tundra. Like, it's just a horrible place on Earth, particularly in winter. But all of a sudden, they'll just be printing money out there, selling their Bitcoin. You know, that they were basically monetizing waste or stranded energy. Once they understand and get comfortable with that, then I think the next step, logical progression for them, is to ask for payment in Bitcoin. And what do the, you know, oil markets look like? There's $2.5 trillion in global trade in oil per annum. That's $7 to $8 billion a day. That's 2 Michael Saylors entering the market every single day to buy Bitcoin to trade oil. That's just oil. And, you know, with the geopolitical overlay of what's happening at the moment, I'm genuinely shocked that Bitcoin isn't much higher, and these countries haven't figured it out much faster. But therein lies the opportunity for us. We get to purchase cheap sats, we get to keep stacking, and, you know, we're going to wake up one day and, you know, one of those tipping points is going to happen. You're going to have an oil producer basically accept Bitcoin for payment of oil. Alternatively, I think we'll have foreign reserves, like a major country will basically put that on their books as a foreign reserve, and it might not be a little bit, it might be a big bit. And, you know, you think about who's the largest purchaser of Bitcoin that we all know. It's basically Michael Saylor. And, you know, you understand his psyche, that when he figured this out, he was paranoid about how he could buy Bitcoin and make sure he got his allocation in time before anyone else figured it out. And so he quietly accumulated. What happens when a country with basically an unlimited printing press figures this out? To me, I sit there and think, well, if I was running that, you know, that central bank, what I'd immediately do is I'd immediately set up, you know, bank accounts or trusts at exchanges throughout the world, and then in an organised hit, I would literally buy every single available Bitcoin in that period. And a question to you, James, about that. Say, I look, you know, at a very basic metric of daily trading, and I think it's roughly about maybe 500,000 coins a day traded. Is that a real figure?
It depends. So there's 2 answers to that question. The first one is how much daily trade happens in all markets, where you factor in derivatives and futures trading as well.
No, on-chain.
So on-chain, if you're looking at purely on-chain, this is the thing a lot of people don't grasp. Because we often look at, like, you know, what do you care about? Oh, look, 15,000 coins flowed out of Binance. It's like, okay, but how many flowed in and out? Because that's the net. You'll often talk about the net. So if you've got 15,000 coins flowing out, I guarantee you, you've got 10 times that amount flowing in and out on that particular day. So this is why on-chain, people don't realize this, on-chain, like $1 billion flows into exchanges every day, and $1 billion flows out every single day. The net is what's left over when you subtract those two. So there is literally $1 billion flowing in and out, that's just spot. Typically, it's somewhere between, like, ballpark 30% spot trading volume, and then derivatives volume is then 10 times, sometimes more than that, above that. Right. So, I mean, we're talking about something in the order of 30, 40, $50 billion a day in trade volume. Obviously, that fluctuates with bull and bear, but, you know, these are for an asset that's, you know, on the realized cap basis, 360 billion. You're talking about something in the order of about 1/5 of its total value trading every couple of days. And so it is quite significant, the amount of trade volume that happens. People don't realize how much flows in and out because they just look at the net flow. Yep. But it's shitloads in and out every day.
Because I've, you know, sit there thinking about what happens when, you know, that scenario comes to fruition. that a central bank sets up a distributed, decentralised purchase of Bitcoin across all exchanges. And then rather than having the billion flowing in, you have one day where 30, 40 billion just flows out and, you know, the exchanges are, you know, having 10% of the volume that they have. That to me is, you know, a cataclysmic event for fiat. And this is, you know, what I look forward to, where I go to sleep one night and I wake up and Bitcoin's 10x, or, you know, the central bank of wherever has basically set a new floor in the price of Bitcoin at $1 million. And if you want to buy a coin or you want to sell one, you know, they'll buy it for at least $1 million, and they've got an unlimited printing press to keep going. So,
yeah, I just want to touch on a point you made there earlier, Pete, about that a lot of people try to apply the efficient market hypothesis to this and say, well, surely everything's been priced into Bitcoin and that sort of thing, so why should it be, you know, any different to price now than what it is going to be tomorrow? But what they miss, of course, is the massive asymmetry of information. You guys don't know how much you're ahead just being like involved in being in this room or being aware of Bitcoin than you are to the vast numbers of the general public that just still have no clue. So that's a very big thing that you really have to look at, because that information only goes one way. We get it now, we get why it's valuable. But that's still, we're only like a tiny fraction of the number of people. So and once those other people learn, and more are learning about it and learning its value, they don't unlearn it after that. That only goes in one direction. So that's incredibly bullish. And so therefore you can't say that all of these things can be priced in because of that asymmetry of information. Did you want to? Yeah, sure.
I've got a question for all of us.
Yep.
What is the one key point or suggestion you make which would help price go up?
While you're thinking. Yeah. I think making people aware of what money actually is. That's the big problem. No one is taught what, I've mentioned this in a podcast recently, is that there's a good reason why no one ever is taught about how this thing that literally controls and plays a role in every single decision you make for the future in your life, and yet no one is taught properly how, even in economics degrees, they're not taught properly how it works, how it's derived, where the money comes from. Because once you start to scratch the surface of that and look at how it works, you look at it and say, surely that can't be right. And you would look at that and think that if this was a system of money that didn't already exist and someone came along and proposed that this is how we're going to do money, you would laugh them out of the room and say, that is a complete scam. Why the hell would I give that sort of power to central people and get involved in a system like that? So the whole thing is based upon no one understanding money. They think it's gold, or they think it's a little money of theirs kept in a box somewhere. They even think there's something like it's got something backing it. All of these fallacies, and as soon as they discover that it's in fact none of these things, then it's very easy to see why Bitcoin is a superior form of money. It really stands out in contrast to the absolute clown show that the legacy fiat money system is. So that's the way I often start when I'm trying to orange pill. I try to actually make people understand what the current money system is, so that when you compare Bitcoin to it, it obviously stands up very favourably.
Yeah, no, I think Jeff Booth has done the best job at explaining this. The dichotomy that people have between, but we're better at doing stuff. So if we're better at farming and we need one tractor for a whole field now rather than 50 people with hoes, why is it that food gets more expensive all the time? So this dichotomy between what is inflation, what is deflation. And people immediately understand that, because they understand that technology makes us better at doing things, therefore you need less people, less resources, less stuff to generate more. So if we're generating more for less, why is the price going up? And that, it breaks people's mind, because we all experience, particularly at the moment, inflation is something that is tangible for people who, you know, in the West, we haven't experienced inflation probably in most of our lives, right? So when you kind of see that, I know the prices keep going up. And I also know that it's more than the 6% they keep telling me. That's a pain point. And you're kind of narrowing in on what is our pain point, which is, I don't really want to spend that much on an avocado anymore. That's a shit show, right? But then you say, well, things should be getting cheaper. And then once you get through that barrier, you then say, okay, do you know why prices go up? And it's literally because we just print money. And the reason why we print money is, in many ways, kind of just an unfortunate, it's because we've already started this snowball rolling. And we have to print the money to deal with this debt problem that is not, we didn't build it, it's not our problem. And in fact, in many ways, it wasn't even our parents' problem. This thing was already baked in the cake for decades. And now we're just getting to the point where it's like no politician wants to deal with it, no person wants to deal with it, no bank wants to deal with it. So we just keep kicking the can until the thing gets absolutely enormous. And that's normally enough for people to just kind of break out and go, right, 21 million, 42 million millionaires in the US alone, probably going up.
Just to finish then, was there any questions still from the audience? We've got about maybe 10 minutes left. I know people are getting tired, it's almost 9, but we can fit a couple more in if you guys are interested in doing that. Yeah,
Another brew.
Yeah, thanks, John. Peter, my question's for you. It's really about, you speak to family offices, institutional investors, that type of thing. Obviously you're preaching to the choir here, we're all kind of on the same page. We're at Bitcoin Meetup, obviously pro-Bitcoin. How are those types of what I call kind of quasi-institutional investors or family offices or high net worth individuals, where are they on the journey as a group? I mean, obviously individuals further along, other people will get it straight away and others won't. So as a kind of investing cohort of that sub-institutional space, as I would call it, where are they? Are they ready to go, or are they 10 years away, or what hoops do you think they have to jump through to get there to make what I would call a meaningful allocation portfolio?
Yeah, that's a great question.
Thank you for that question. I think, day to day I look at, say, we don't really talk to institutional investors a lot. I've got, friends who are instos or in that institutional market. Institutional, I don't think, is really ready for it. You've got some, forward-thinking funds management businesses like Fidelity, which is, really deep into the space. But from a broader perspective, the Australian, superannuation industry, I don't think is really ready for it. They haven't got any, to my knowledge, any preparation for it. There was talk that the Future Fund did have some allocation to it, but that wasn't the physical, that was, effectively paper. From a family office dealing with families, they're very good at taking direction, so it's really about who's their advisor in that capacity. And one of the things that I try and highlight to everyone who I talk to in that capacity when we first meet them is you need to understand, or they need to feel confident that you understand what the options in the world are right now. And this is where I spend a lot of time in my orange pilling of people talking about and showing a command of what's happening across the economic spectrum, whether it comes to unemployment, whether it comes to interest rates, whether it comes to the investments in stocks, commodities, bonds, you name it. You need to have a really deep understanding of what's happening in each of those markets. And then when you peel the layers back and you start talking about, well, what are the potential risks? What are the problems in those markets that we're seeing? Let's just take, for example, stocks. Stocks, they'll sort of basically broadly go into two different categories. You've got the value stocks, which are typically your, value investors where they derive a dividend and they pay you a dividend and, they basically pay you cash to hold it. And then you've got the other type of stocks, which is typically a growth stock, where they don't pay you anything and they just go up in value a lot, and that's been typically your FANG stocks. And this is where I think traditional investing hasn't really understood what has happened in the last 10 years. And there has been a fundamental break in that value v growth type stock investing. And I'll just sort of explain this, that it sort of overlays into the debt markets and the level of debt that we're currently sitting in, and then I'll bring in the other assets just briefly. But up until 2010, if you were a growth stock, when interest rates went up a little bit, your stock got absolutely hammered. And why did that happen? In order to be a growth stock pre-2010, you needed to have large amounts of working capital, large amounts of debt, you needed to have access to credit markets. And that was very expensive because the profit margin at the margin, when you're growing, when the rates go up, it basically eats all your profits, so the value of the stock goes down dramatically. Enter post-2010, you had all of the growth stocks basically had a zero marginal cost of production, and I'm talking about the FANG stocks. So no longer did they require working capital, they didn't require debt. And if you look at the S&P 500 and who has the largest cash balances across them, it's the FANG stocks. They've got 80 or 90% of the cash basically sitting in the top 10 companies. Why is that? Because they've got zero marginal cost per additional unit of production. And this is where there's been a switch, I believe, from 2010 moving forward, that the value stocks over the last, say, 24 months haven't actually been affected all that badly when it comes to the interest rate rises. And you look at what stocks have been absolutely belted, it's all of the FANG stocks. But I'm sitting here and I'm looking at it thinking, the market, and the market's always right, so I am wrong and I'll take full responsibility for this, but I'm looking at this and thinking, the market's got this wrong. And what they're failing to understand is that all of a sudden these value stocks are the ones that have got high debt levels, they've got high working capital requirements. The value stocks are the ones that have basically conducted effectively all of the share buybacks. So if I'm looking at that, I'm thinking the value stocks are up to their eyeballs in debt, and all of a sudden all of the growth stocks are basically sitting on piles of cash. But what's happened in the last, say, 12 months in particular is that the growth stocks' price earnings multiples have been absolutely decimated, or annihilated, probably a better word, and the value stocks have just managed to hover along like that. I'm thinking, what planet is everyone on? They're the ones with the debt. The growth stocks don't have the debt anymore. There's a complete mismatch. And this is where, when there's a return of liquidity to the market, which is going to be great for Bitcoin, and a dropping of the interest rates, I expect the rest of the market to figure that out and all of those growth stocks to just come ripping back. And so, to that point, when we're talking to clients and talking about the orange pilling, I talk about the level of debt, and I cover the level of debt in the stocks, and then you look at the level of debt in the property markets, it's basically up to the eyeballs. And when you look at the bond market, I understand that bond or credit markets are effectively debt full stop, but that is debt, and guess what? The credit markets are up to their eyeballs in debt too. They cannot take it anymore. It's saturation levels of debt. Even in the bond markets, the two biggest bond purchasers on earth, the Japanese and the Chinese governments, have basically said, mercy, mercy, we can't take anymore. It's like, leave us alone. So, and this is to your point, James, earlier, where you talked about all assets are now correlated to one. They're correlated to one because we're up to our eyeballs in debt. Now, what that presents then, I think, as an opportunity to talk to clients about is, hey, because we've now got all of these assets correlated to one, they're all moving in unison, we need an asset that's outside the system that is a bearer instrument, that doesn't have any debt against it. And this is where, to I think, a very critical point, that if you self-custody your Bitcoin, you're doing the very best thing that you can to help price go up, because all of a sudden there's less coins on exchange for the paper markets to manipulate. And so hopefully putting that back to how do I talk to clients about that, demonstrating a very clear understanding or a deep understanding of what the problems are with our existing markets, and then applying a rationale to that to say, hey, these are all the problems with it, guess what, there's no problem with this. And if I overlay on top of sort of highlighting the problems with that, how we look at portfolio asset allocation, that 60-40 portfolio is dead. We haven't done bonds for like the last 10, maybe 12 years. Don't like them. The risks in those are just obscene, and people think that it's money good having a bond. It's not. It's really, really risky. Because when they go down, they don't bounce back, or you've got to hold that to maturity. And I'll just highlight a very quick example. A client forwarded to me a UK 40-year gilt that was purchased in December 2021. By September 2022, 10 months later, if you put £100 in that 40-year gilt, it was worth £25. It lost 75% of the value in a 10-month period. Now, that's basically a write-off, unless you want to hold that for the next 39 years and 2 months to get your £100 back on maturity. Now, no one's doing that. And this is where, so the bond market's basically dead. When you look at portfolio asset allocation, you look at what are the types of assets you can invest in: stocks, commodities, bonds, property. You want to be holding a lot of cash. You want to be effectively have a barbell strategy where you have an overweight to, say, a Bitcoin, overweight to cash, and then in the middle, stocks and property. Exclude bonds because they're just rubbish. You also have an allocation to, say, alternative assets. And what does alternative assets make up? In this market, it basically means private equity, venture capital, potentially infrastructure assets, and my favourite, Bitcoin. And so with all this turmoil going on, when you make up an asset allocation from a portfolio, you look at this and think, well, alternative assets probably, say 10 years ago took up 10% because they were sort of, fringe. That's now moved closer to 20-25% of a client's portfolio across the board, like major institutions and the rest of it. And then from a personal perspective, I think when you understand Bitcoin, it's very easy to justify that 50% of that alternative asset allocation should be allocated to Bitcoin. And so before you know it, the client's nodding, and this sounds awful, but the logic's there, the rationale's there, but they've subconsciously agreed to a 12.5% allocation to Bitcoin. However, when presented with that, hey, we agreed to this, it's like, well, I didn't agree to that. It's like, no, follow the bouncing ball, we did agree to that, but let's just start with 5% and then we'll build up to there. So
that's incredible, Peter. Well, I think we might wrap it up there. We've got time, we've got the room. I don't think they'll kick us out of here anytime soon. So let's continue any further questions in drinks afterwards. But for now, please join me in thanking James and Peter for tonight. Thank you, Peter. Thanks, James. Just a couple of other announcements before everyone rushes off. Well, those that are rushing off, please don't. I know it's a school night, but we've got Bitcoin Pizza Day coming up. So for those of you who don't know what that is, that's to celebrate. It's something that's marked every year in the Bitcoin community. It's coming up, I think, Monday the 22nd of this month, so only less than 2 weeks from now. And so that's to mark the first time Bitcoin was ever spent on any kind of transaction ever. So it's like the first time Bitcoin was given any value at all, because a guy through a message group, a guy called Laszlo Henix, said that I will pay 10,000 Bitcoins to anyone who orders me 2 Papa John's pizzas. A couple of different possible lessons you could derive from that. One might be, yes, great, spending Bitcoin helped Bitcoin take off. On the other hand, it might be, don't spend your Bitcoin, otherwise you'll end up, you'll end up looking back at the future. Your descendants will look back at the future on your blockchain and look what you squandered 10,000 Bitcoin on. All they got were 2,000 pizzas. So take whatever you want and the message out of it. But the point I'm getting at is that we want to mark that again this year. We've had it in the past at a restaurant called Vapiano, which is near Club York. We were thinking of trying a different place this year. Didn't even know, down on, what's the name of that, Harry, what's the name of that street? Bill and Tony. Yeah, what street is it on?